Hey everybody, so in this video, I want to talk about what exactly happens if you own shares in a company that went bankrupt. So how exactly is this loss characterized? So in this video, we're going to use Bed Bath & Beyond as an example. So here we're looking at BBYQ, which is Bed Bath & Beyond, and you might be thinking, wait, don't you mean BBBY? But no, I don't mean that. Because what essentially happened was that Bed Bath & Beyond, they were listed on a pretty big stock exchange, but then because their share price fell so much, they got booted off the stock exchange and went over to the OTC market, where they then had to list their shares as BBYQ. So I just want to clarify that real quick. Now right here, we see their stock price history, and we can clearly see that September 29th was the last day that this was trading. After that, this was delisted. So, what we want to look for is we want to look for some sort of information from the company saying that this was delisted and that this stock has no more value, because that is very important in determining how this loss is treated. So, obviously, we're not going to go to the company website because it doesn't exist anymore. So where we would want to go instead is the SEC, because pretty much everything that they are filing is going with the SEC. So right here, we would basically look up sec.gov. And then basically right here, I'll just do sec.gov. And then where would I look right here? So I would go into filings. I would do search and access. And then I would go over to this Edgar full text search. And right here, I would be typing in BBBYQ. Now, I already went ahead and did that. And essentially, this is what popped up. So I'm just going to show you right here. So we put in BBYQ, and then we're going to scroll all the way down. What we want to look for is we want to look for some sort of filing that is very close to this end date right here. That's September 29th, 2023. So going back, we can see that all the way down here. September 29th, 2023. And this is under an 8K report. So what exactly is an 8K report? So I just want to explain this really quick. So there's a 10K report, which is the annual filing. That's going to show the full year's financial statements. There's a 10Q report, which is going to show basically the quarterly statements. And then an 8K is basically going to talk about events arising in the company. And essentially, the company is reporting this to the SEC for their investors. So when I click into this 8K report, it's going to show this right here. So I'm just going to scroll up to the top. So this is what the 8K form looks like. And what we want to specifically zoom into is this section right here. It says item 1.03, bankruptcy or receivership. Now let me just zoom in a little bit because this text is pretty darn small. So right here, we want to look for something that's pretty much telling us that this stock was canceled and it has no value. So we pretty much just want to read through this section right here, but I already know where exactly they say this. So right here, I'm just going to look up no value because they say that right here. So let me just read this little excerpt right here for you. So it says, as a result of the confirmed plan beginning effective, all of the company's equity interests, consisting of outstanding shares of common stock and Series A convertible preferred stock of the company and related rights to receive or purchase shares of common stock, were canceled on the effective date without consideration and have no value. So right here, what are they saying? I want to break this down again. So they're pretty much saying that, they have shares of common stock right there. And then these were canceled. And as of the effective date, which I'm assuming is pretty much this date right here, the one that this report is filed on, it says considered to have no value. So no value means that the stock is worthless. So it's canceled on the exchange and it has no value. Now, what we want to look up is the tax information associated with this. So how does tax law treat a stock that has no value? So basically, this would be called a worthless security. So right here, now I have this nice subscription to CCH Answer Connect, which is pretty much a tax service website where you can look up tax information. So when I looked up worthless security, this is what came up. So right here, it pretty much says an individual may deduct a loss on worthless securities only if the loss is, so they give us several different descriptions for when you may deduct a loss on a worthless security. So right here it says incurred in a trade or business, incurred in a transaction entered for profit, and this right here is what applies to us because we went ahead and bought the stock and we were pretty much assuming that we were going to make some profit, but that did not necessarily happen. So now they're going to go ahead and define what a security is. So it says right here, for the purpose of worthless security rules, the term security means, and right here they give us a list, and the first one is going to apply to us. Stock of a corporation. Bed Bath & Beyond was a corporation. So therefore, this is a worthless security. So now they're going to go ahead and they're going to talk a little bit more about worthless security. So right here it says capital or ordinary loss. How are we going to define this type of loss? So it says a loss generated from a worthless security is usually a loss from the sale or exchange of a capital asset and therefore allowed only to the extent provided in IRC section 1211 and 1212. So what essentially does this mean? It essentially means that it's pretty much treated as any other stock. So it's basically going to be a capital loss if essentially the stock is worthless, so it has a value of 0 and your basis was higher than that. So essentially you have a capital loss. Is it going to be short-term or long-term? That depends on your holding period. Now they're going to talk a little bit more about worthlessness. So it says right here, determining worthlessness. It says a security becomes totally worthless when it has no value or potential value. Now, if you guys remember in that 8K report, they said specifically that the stock was canceled and has no value. Now let's go ahead and read on. It says, however, the determination of whether a stock has become worthless and if worthless, the year in which it ceased to have value is a question of fact. It says the burden of providing the worthlessness of stock is on the taxpayer. A taxpayer who is claiming a loss deduction for worthless securities must generally prove that, and then there's 3 subsections right here. It says the security has some value at the end of the preceding tax year or at the beginning of the tax year in which the loss is claimed. Number 2, the security became completely worthless during the tax year in which the loss is claimed. And number 3, the worthlessness of the security was established by an identifiable event. So all 3 of these qualify because we know that Bed Bath & Beyond had some value this year. So we could go back right here and we can clearly see that, hey, you know what? The stock opened at 10 cents. So it had some value right here. So during the year of 2023, it had value up until September 29th, 2023, where after that, it pretty much got canceled and delisted and deemed to have no value. So going back right here, it says the worthlessness of the securities was established by an identifiable event. Well, that came in the 8K report where they pretty much said, hey, you know what, we're bankrupt and we're canceling the value of the stock and we're taking it off the exchange, blah, 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 all of that. So we know that in the current year, 2023, that this stock became worthless. Therefore, we can fully deduct the value of it against our capital gains. So let's say ultimately, we have 100 shares. We bought the shares at $3 and we bought that at the beginning of the year. So January 1st, 2023. And then come September 30th, it's pretty much worthless. So it's worth 0. So therefore, if we bought 100 shares at $3, our tax basis will be $300. So we have a $300 short-term capital loss. Now, if we have $500 of short-term capital gain, well, guess what? You can pretty much just offset that. So ultimately, at the end of the year, you would have a $200 capital gain. in the short-term category. So I hope this video helped you guys out, and have a great one.